what happens if you're in a situation where you cannot pay your tax bill to HMRC? Do you have any alternatives, or are you simply faced with no other options than to incur fines, penalties, and also incurring what could be a potentially significant debt? Now, this is a very stressful situation for many business owners and even a lot of individuals when they receive a tax bill and then they find out that it is simply not affordable for them, or they are simply unable to make that payment to HMRC. This is what we're going to be talking about in today's video. We are going to be talking about some of the reasons why many people might struggle to actually be able to pay their tax bill in the first place, and what exactly are your potential options if you ever found yourself in a situation where you are not able to make that payment to HMRC and clear off your tax bill. Hello, if this is your first time here, my name is Tess and I'm a UK qualified accountant, and on this channel I share weekly videos to help fellow entrepreneurs like you grow and thrive in their businesses. If you ever want to work with me on a one-to-one basis, you can do so by using the link in the description box below. So let's start by talking about some of the reasons why many people might actually fall into a situation where they are unable to pay their tax bill in the first place. The first reason is where you have simply not budgeted for it, or you have budgeted, but that budgeting process has not actually factored in the right percentage for what your tax bill might be. So imagine you started a business today and you're generating that income on a month-on-month basis, but you haven't actually factored in how significant your potential tax bill might be. Now, in my opinion, I have definitely seen the cases where many individuals started businesses and they just simply were not budgeting at the right level for the tax that they should be. Okay, I would say definitely from experience, when you are earning money and you are either self-employed or you run a business, I would always advise that you set aside a minimum of at least 20% of whatever your income is aside for your tax bill. Obviously, depending on how many years you've been in business and how your potential annual income is changing on a year-to-year basis will greatly affect what percentage you would need to put aside to actually pay your tax bill when the end of your accounting year comes, or indeed when you submit your self-assessment tax return. Now, the second and possibly one of the most common reasons why many people will often find themselves in a situation where they are unable to actually afford to make a payment on their tax bill is because they have failed to consider what is called payments on account. Now, payment on account are basically tax payments that are made in advance towards your tax bill for the following year. Okay, and this is usually a payment that is made for those who are usually filing their tax returns via self-assessment. Now, a lot of entrepreneurs will usually tend to get caught out by this, so it is important that if you're new to the world of actually filing your tax returns, this is something that you need to actually account for, because you will not only have to pay your tax bill as a result of actually filing those relevant tax returns, but you will also have to make what is known as a payment on account as part of also filing your tax returns via self-assessment. And what exactly are your options should you find yourself in the position where, for whatever reason, you are actually in a position where you're unable to actually pay your tax bill? It might be because you have experienced significant financial difficulties as a result in the changes to your business's circumstances, or it might be that you've even encountered different kind of personal circumstances which has then affected your finances. So let's talk about some of the options that you have available to you if you found yourself in the situation where you are unable to make a tax payment towards your tax bill. The first thing I'll do is to inform HMRC as soon as possible. It can be very tempting for a lot of people to, ignore any letters or correspondence that comes through from HMRC when they realize that they have tax bill that is, unaffordable to them to make a payment at that point. But I would strongly urge that you do not do this. Instead, you should definitely try and contact HMRC regarding your outstanding tax bill, and you should talk to them about your current circumstances. And in most cases, a lot of candidates will usually find that HMRC are usually quite receptive to, working out some sort of a payment plan or a direct debit structure where you will then be able to actually make installmental payments that goes towards actually paying off that tax bill. My next suggestion to you would be to get yourself on what is called a time to pay arrangement. Okay, so this is a repayment plan that is actually offered by HMRC, but actually one of the best ways for you to ensure that you're actually able to get yourself on this payment plan is by making sure that you contact HMRC much earlier. Okay, so contacting them as soon as possible before the closing date or the deadline that you need to actually make that tax return. There are some criteria that you would need to meet usually, okay, when you are looking to actually get HMRC to consider putting you onto the time to pay arrangement. Now, some of the criteria you need to meet when it comes to actually being able to secure a time to pay arrangement with HMRC to help clear off your tax bill will include, but is not limited to, you being able to pay whatever the outstanding tax bill is over the next 12 months usually. Okay, you should also be in a situation where you're able to pay the current tax bill, as well as obviously have made sure that your tax returns have been filed, consistently. So do make sure that when you're contacting HMRC, you have all the relevant details, all your relevant paperwork, things like your UTR, for instance, so that they can get an idea of what your current tax account looks like, and they can see whether or not you're a good candidate for time to pay arrangement. In most cases, your accountant would be the best person to actually, help you navigate through this process to help ensure that you are in a position where a time to pay arrangement has been set up for you by HMRC. It's important to bear in mind that when you do contact HMRC to actually get this arrangement set up, you might be asked certain questions. Usually it will be questions along the line of what other debts do you have, okay, outstanding other than your tax bill, and how likely is it that you're actually going to be able to commit to the financial plan that HMRC are looking to set up. HMRC might also question you around whether or not you have thought about using credit cards or loans or other alternative forms of finance to actually pay off the tax bill. Now, a time to pay arrangement usually works as quite a good option for most individuals, because provided you are in a situation where you can obviously keep on top of those payments that have been set up for you as part of the payment plan, and you can get those payments made within the next 12 months, then you will usually be in a good situation to actually, get that time to pay arrangement in place to actually ease that burden off you rather than making the entire lump sum in one go. Now, it is important to actually let you know that you will definitely end up paying more due to the interest payments, okay, than if you actually paid that tax bill in one lump sum. This is because HMRC do charge interest when you are looking to actually extend the length of time that you're using to pay off your tax bill, okay? So i.e., if you're going to get set up on a payment plan, they will definitely add what their interest charges are, okay? Now, in the rare occasion where you're in a situation where you are clearly unlikely to be able to afford anything whatsoever towards your tax bill anytime soon, then one of the options that you might have available to you is a voluntary liquidation, okay? And as part of voluntary liquidation, this basically means that all debts, okay, so corporation tax, VAT, and any other forms of tax bill owed to HMRC, okay, by yourself or by your company, would be written off. Okay, so this is definitely not an option that most people would generally seek to take. It also obviously depends on what your particular circumstance is and what your overall business goals are. It really does depend. So I would definitely stress that before you consider this option, to speak with a professional accountant who can, of course, guide you on what the best course of action is, depending on what your particular circumstance is. Now, if you're ever in a situation where you require tax advice and guidance, then please do use the links provided in the description box below. Thank you so much for watching, and do make sure to give this video a like and make sure to subscribe and turn on your notifications. I will see you in the next video.